this video, I'm going to give you a 15-minute trading strategy that nobody talks about. It's simple, it's easy, and best of all, you only need one time frame for this. I've made it as simple as I possibly can. There's no complicated daily buys. You only need just the 15-minute chart. So let me show you what the strategy is step by step. Okay, so for this trading strategy, all we need is, of course, just a 15-minute chart and liquidity. Now, liquidity is by far the most important concept in all of trading, right? Because it's how the markets actually move. So all we need is the 15-minute chart and some liquidity. Now, this is going to be a day trading, scalping sort of model, right? Obviously, you're not going to be swing trading on the 15-minute chart. You want to be swing trading on the 4-hour chart. So for this day trading strategy in particular and scalping strategy, we want to trade during a major session, right? And this relies on the key sessions. Now, if you don't know what the sessions are, I'm going to put them on screen now. You've got London, which is 2 till 5 a.m. Eastern, New York, which is 7 till 10 a.m. Eastern, and Asia, which is 8 p.m. till 12 a.m. Eastern, right? So I'll put that on screen now. And what this session or what this strategy really relies on is previous sessions liquidity, right? Because liquidity is quite a vague, hey, Atif, what sort of, what high or low am I targeting? Is it this one? Is it this one? Is it this one? Which one is it? This right here, this trading strategy kind of removes all of the guesswork, and it's almost a mathematical way of trading, if that makes any sense. So what you need to do is you need to trade during a key session, right? So like we just talked about the 3 sessions, London, Asia, and New York. Now, this market right here, and this strategy will work in every market. This is the Japanese stock market because someone in the comments and even video was asking for it. So here it is. I do listen to it. I do read the comments. So here we go. Japanese stock market on the 15-minute chart. Now, not obviously, but this is a Japanese Asian stock market. You probably want to trade it during the Asia session where there's the most volatility. So, like I said, 8 p.m. Eastern is when the beginning of Asia session happens. Now, this is so important for basic, and you can go in your charts and you should always backtest this. For basically every session, right? Asia, London, New York, it almost always is a fake move at the open. So what I actually mean by that is, and everyone knows about indices open, right? Where indices open is just a fake move up. Let's say when you're bearish, price goes down, gives you a little retracement, and then drops, right? That's what normally happens. However, most people don't understand for London, New York, Asia session, what normally happens is, let's say the day is bearish, right? Let's say this is Asia session. What will happen instantly, let's say this is the open, is price will come up, a little fake move, it'll take out the previous session's high, then it will start to drop, then it will give everyone else, or smart money traders, that high probability retracement, and then it will drop, right? Like, you very rarely will you see, let's say this Asia session just drop massively, right? Only time you'll see that is maybe a news event, but what you're always going to see is, and you see this in London all the time, which is, let's say London's bearish, fake move, or Judah swing, or whatever ICT calls it, Judah swing, fake move, liquidity purge, run, grab, then price drops off, high probability retracement, ride price down, right? So that's kind of what we want to see, and you can almost see this right here in this bit of price action, right? How this is, remember, this is, or is it 8 p.m. Eastern? So 8 p.m. Eastern is the beginning of Asia session. What does price do? It instantly comes all the way up, right? So let me just zoom out a bit. 8 p.m. Eastern here. What does price do? Instantly comes all the way up. Look at this giant wick here. Can you see this wick? This wick comes all the way up, takes out stop loss orders here and here. This is previous session's high. So this is New York's high. And this is actually previous day's high, right? So can you see that? Does that make sense? Right? 8 p.m. Eastern. This is the beginning of Asia session. We do not care about this bit of price action because it's before Asia. It's before the major session. We only care about during the actual session, right? So 8 p.m. Eastern, price instantly shoots up. This massive wick is I don't even know what you would call it. It's a huge red flag that this is a liquidity sweep, right? The wicks do the damage and the bodies tell the story, right? You probably heard ICT say that, but this giant wick here is almost always a stop run, right? Price comes all the way up. It grabs liquidity here. Grabs liquidity here, starts to drop, gives you a little retracement here, which I'll talk about in a second, and then drops massively like a brick, right? Now remember, Asia session is bearish. Obviously, this is the real move, but price doesn't just move, price doesn't move in straight lines. It's highly manipulated, and that's where most traders lose. So most sessions always start off like this, right? So at the open, fake move up, drops, retracement, everyone else rides price down, right? So that's how these markets actually move. So for this session, really, or for this trading strategy, let's just remove these 2 lines here. What we want to see is if we're bearish, and the good thing about this trading strategy is we don't have to guess whether we're bearish or bullish. We let price show us at the open. So we wait for the session open, and again, this will work for indices. As soon as the open happens, as soon as the session starts, what liquidity pool does price go for? Instantly, it goes for New York's high. Instantly goes up, huge wick, goes straight for New York's high, and it sweeps New York session. Let me just make this, actually, let me just put the indicator on. And for those who don't know, the indicator is now live. You can actually get it, which is great. So again, this shows you a sweep here, but we only care about Asia session that we're trading. So price sweeps this high, and it also sweeps this high all the way over here, which is previous day's high. So we have our liquidity sweep. Let's just disable the indicator. Again, you get the indicator down below. It's fine. They finally fixed it on TradingView, so it's back. So let's just disable this. So this is really the liquidity sweep that we're really afterwards. But there's two liquidity sweeps, but let's just make this clear. So this is the sweep. See this wick, right? This wick right here is screaming at you that it's a sweep. It comes all the way up. It takes out all the stop loss orders. It starts to drop. High probability retracement, ride price down, right? But remember, this is Asia session, 8 p.m. Eastern, right at the open. Price quickly goes up, grabs the liquidity. That is telling us, right, that this is likely to be a fake move. However, I don't know this is going to be a fake move. There are some traders who will just enter as soon as price takes out this old high. And you might hear this be called turtle soup, which is a very strange name, I know. But like that's what these traders will do. They'll just, hope and, I won't say gamble, but they'll hope and pray that, as soon as price takes out this high, that it's going to start to reverse, and they put their stop loss wherever they think is comfortable. Now, that for me is not good enough at all. I always want to see confirmation. Now, the easiest way to see confirmation is to wait for a fair value gap to form in the opposite direction. Now, remember, this is the 15-minute chart, not the 1-minute chart. This is a very significant time frame, the most important time frame as a day trader, right? So this is super important. And, what happens on there's no messing around on the 15-minute chart. On the 1-minute chart, yeah, there can be manipulation. 15-minute chart, there's not much room to move, right? Remember, this is day trading where you've only really, you got to think, how many 15-minute candlesticks are there in a day? What was it, 4 in an hour? I've got a master degree too. What was it, like 96? Like, there's not many candlesticks, right? Not many candlesticks. So, there's not much time for manipulation. But this fair value gap here, which completely botched. But this fair value gap right here, once this forms, right? Once this fair value gap forms, that right there is my confirmation that this is actually a fake move, right? I'm always waiting for confirmation that I'm on the right side of the market. I'm not just going to guess that, hey, I think this is a sweep, because at this point right here, price could easily just continue upwards, right? So once I've got the fair value gap, I'm pretty confident, all right? I'm not 100% sure. You're not guaranteed to make money. You can lose money in trading too, which nobody talks about. So, but at this point, I'm pretty confident. Okay, we've had the sweep. We've got the fair value gap. Probability is definitely now favored. So what you're going to do now, enter on the fair value gap, stop, it's going to be at liquidity sweep high. Now I know it is a big stop loss, but this is the 15-minute chart. We are day trading. You can target a big risk, big risk to reward. You can have a wider take profit, right? This is day trading here, so we don't have to have like a really tight stop loss. So for your take profit, for me, I'm always targeting a 3-to-1 like that, right? It's always fixed for me. Now, personally, if you were trading, you've got this easy little liquidity pool, which is what? Asia sessions low. Like that. Now, I wouldn't get more crazy. I know you can, but I wouldn't get any more crazier than this. Because the stop loss and take profit is already fairly wide, right? So always be grateful. I always say this to my private students, get your money and get out. Get your money and get out, right? These markets can reverse quickly. But you can see when you're on the right side of the market, you don't have to finesse your entry. You don't have to have a really tight stop loss. Those people who have a really tight stop loss aren't confident, and they have really low win rates, so they constantly get stopped out, but they have a massive take profit. So I don't know, 1 in every 8 trades they win, and then they make money or whatever. But for me, this is all you really need, right? If you can get this and a 50% win rate, that's enough to become profitable. Now I know you see all these high win rates, which you can get, but it's going to take you more experience, right? So if you're just starting out, a 50% win rate and a free risk to reward ratio is all you need. Now, of course, as you get more and more years, more and more experience, your win rate's only going to go up. So but this right here is enough for a trading strategy, right? This is right here is enough for a trading strategy. Now I have to be very careful, right? Because YouTube gave us a strike. I'm not guaranteeing anything, but you get the point, right? You get the point. But if you want to add to the win rate even further, you're like, okay, Steve, how can I increase my edge even further? You do want to add daily bias to this, right? Because if you've got the daily bias correct and you see this, your win rate's going to go even higher. So if you want to learn more about daily bias, make sure you check out this 30-minute masterclass where I teach you everything that you need to know about daily bias.